Hello everyone. The global fight against inflation just got a second win. Today, Reserve Bank of Australia made a bold move, rising interest rate to 4.35%. It's the third hike in this new phase and it signals a major shift not just for Australia but for central banks worldwide. Let's break down why this is happening now. Australia is facing a double blow of pressures. On one hand, we have a domestic economy that is running too hot with a very tight job market and high spendings. And on other hand, a sharp energy shock from the Middle East conflict has sent the oil and gas prices soar. The headline inflation has hit 4.6% and the RBA is worried that these high costs are starting to leak into everything from transport to basic services. Simply put, the risk of inflation staying high for too long is now too big to ignore. So, what does this mean for the average person? The RBA admits that higher rates are starting to pinch household budgets, but they also noted that business investments remain strong. The bank is walking a tightrope. They expect inflation to peak near 4.8% this year. Because of that, markets are already betting that this isn't the end. Many experts now expect the cash rate to hit 4.7% by the end of 2026. A goal is to cool the economy down without causing a complete freeze. So it's important to look at the broader picture. Australia is now acting in isolation. We are entering a renewed global tightening cycle, where central banks across major economies are moving in the same direction, from the US Fed Reserve and the European Central Bank to Reserve Bank of India. Policymakers are responding to rising inflation risk with a more hawkish stance. The common priority is price stability, protecting the purchasing power of money, even if that means accepting slightly slower economic growth in the near term. So the era of ease, cheap money is clearly fading. With energy risks remaining elevated, the RBA is taking the lead to prevent inflation from getting out of control. Going forward, energy prices will be a key factor influencing interest rate, including what you pay on your mortgage or loans. Thanks for watching.